Making money in the crypto market is actually quite easy. It's actually one of the easiest things to do in crypto. Keeping it is the real hard part, is the real tough skill. Today, I'm going to be showing you guys a very, very, very important tool that you're going to be using your whole trading career, and that is the main stop loss. And that stop loss is there to help you with risk management as well as taking profits. This is a show you do not want to miss. Yo, what's up, guys? Welcome to Masterclass. Welcome to Crypto Banter. I'm Sheldon the Sniper. Before we begin, hit that like, hit that subscribe button. Make sure you're following us on Twitter. Make sure you're following us on Instagram. Join the biggest and the baddest community out there. You know, we got the 2 shows where we teach you guys every day. And the whole purpose of Masterclass is to make sure you understand the shows. And big topic, stop loss. Guys, what is a stop loss? Guys, a stop loss is a risk management tool. It means that in trading, we predict at specific times, either off news, either off of charts. And the main thing of a stop loss is when we predict, we're predicting the market to go in one way, right? If it goes wrong, what happens? We end up getting stuck in a coin, we end up getting stuck in a position. And we know such a volatile market, if we buy at the wrong time, we can really get hurt. So by having a stop loss, you're able to reduce your risk. You're able to manage your actual risk and start planning your trades rather than just entering the market. Why is it so important? Guys, you can literally get to a point where if you buy the top and you do not have a stop loss, you can literally lose 80% of your account. And that's the sad reality of crypto. So the importance of understanding that we can actually look after ourselves and there is a tool to help us is very big. And this is the big tool we're teaching you guys today. So I think let's get into it. Let's go have a look. As you can see, guys, when I'm talking, remember we have the coin panel. I'm going to be using coin panel. I'm going to be using Binance today. Descriptions, the links are in the descriptions below. Remember, coin panel, guys, is a charting service that we give with the show where you are able to see our charts. And when I'm giving you guys charts, you can see I always give you buy zones and I give you a more or less stop loss area and I sort of help give you structure. But in order to understand that when you're taking these trades and how to set the stop loss can be quite tricky at times. So I'm going to be showing you guys the charts of coin panel and showing you the basic setup on how all exchanges work with the stop loss. Coin panel itself, let me just get into that mode. You can see there's a stop limit over there, as well as Binance. You can see there's a stop limit over there. KuCoin, FTX, all of the exchanges all have the same sort of structure. So when you go into your Binance or any exchange and you get to your normal dashboard, your trading dashboard, and you scroll down, you will see the order books on the left. You'll see your limit, your markets, and your stop limit. So I'm going to be showing you stop limits. So we know, guys, in order to put a stop loss, with a bull position, meaning that we are predicting the market to be going up, a long position, sorry. So meaning that I'm entering the market, I'm buying a crypto coin right now, I'm expecting it to go upwards. If it goes wrong, how do I protect myself? Okay, and that's where the show comes in. This is where we come and help you guys with risk management. Now, as you can see, we've got limits, we have markets, and we have stop limits. Limit and market, we use to enter those actual positions. Now, the difference between limit and market is limit, you're able to select the price that you want to buy at. The only thing is you cannot control the time, meaning Bitcoin's 44,000 now. I see it going down to 43 as an example. I would rather buy it at 43 than buy it at 44 right now. So I can go to limit now. I can go put in 43,000. And what it means is if there's a seller for the amount that I want to be buying at that point, at that price, it will go through. So I'll basically place this over here. As we can see, place it, then gets put into the order book. So you can see an order gets placed over here. And if there's someone that's willing to sell or buy for that specific price, the order will go through. So you can control the price. You just don't know when someone will buy or sell your coin. Then we have the market. And what the market is, it's the quickest way to get in and out of the market. So you have control of time because you can get in and out quickly. The only thing is you don't have control of time, of price. And what I mean by that is when you market's executing, you're buying or you're selling, you're buying the nearest person that's near you with enough capital that will take that order for what you're wanting. So meaning that if I want to be buying Bitcoin now, and I want to market execute, it will take the nearest guys that are selling on this and fill up as big as my position is. It may buy from a few different people, and my order will get executed between either one person or a few people at different little prices. Now, when market executing, it's very important. Larger volume coins is the best with market executing, because it means when I'm buying at this time I'm selling, I'll get it very near to what the actual price is of the coin because of the volume, and there's so many people buying and selling. So by using these two markets, you don't have control of price, but you have control of time. So that's the difference between those two. Limit, your orders get put into the order book. Now we got the stop limits. Now, I'm going to be teaching you guys the long stop limits, meaning that I'm taking my dollars, I'm buying the coin, I'm predicting the coin's going to go up. Or you're watching a show and someone's saying the coin's going to go up, right? Now, what happens if it goes wrong? How do I protect myself? Now, we know that limit sits in an order book. We know there's an order book. If you limit ordering, the difference is with a stop limit is you are able to set a price below the price that you bought it at without it executing, without it actually going into the order book. And that's where the little trick comes, where you got to stop and you got to limit. And what they like to call the stop is a trigger price. Now, let me give you a quick example of what I mean by that. Now, if I jump to Coin Panel and we have a look, let's get back into watch list mode. There we go. And let's use Bitcoin. I'm going to be using Bitcoin as an example today. There we go. Okay. So with Bitcoin now, I gave you a zone, right? Now I give you a zone. I say, guys, this is where we want to buy. Then I say, guys, we don't want to go lower than the previous low. So stop loss should be sitting in that sort of region. So now you look at, and I'm going to, for the sake of this call, I'm going to say that this was the buy zone and this is where I'm setting a stop loss. Now we're in buy zone. Okay, cool. Sheldon said we're in buy zone. Now we go, we take our dollars. I want to get in the market. We are currently in buy zone now. The difference between limits and markets is if we're in buy zone right now, I'm able to come and market execute. And if it does that, you can see it buys my Bitcoin. Now I'm in the position. Okay. But now sometimes we'll be on the show and we will be up here somewhere. And I'm saying, guys, we're going to come down here, but we're currently in this position over here. Now I know, okay, I can go and set a limit order, because why must I pay 44 now when Sheldon's saying it's going to come down to 43? And that's how you can get in. So now, either way, you've now bought your Bitcoin. Okay. Now I say, guys, here is the stop loss that we need to be putting at. So my stop loss currently, I'm going to use 41,000 as an example. Now I go to stop limit. I have my Bitcoin and I'm going to put 41,000. Okay. Now stop. This is called the trigger price. Means that when the price gets to 41,000, then orders will only go live in the order book. So until then, the orders will not go live in the order book. Why? Because if it's set in the order book, someone would take it. Obviously, Bitcoin is 44,000 now. And if you put an order in of 41,000, someone will obviously take it. So this is where the little tool comes in, where they don't put it in the order book. They only put it in when this price is triggered. Once 41 is triggered, then your orders get put in the order book. And the whole goal is, I've taken my USDT now, I've taken my fiat, I've bought Bitcoin, and now I'm expecting to go up. But if it drops and it goes wrong, after 3% or 4%, please sell me back into dollars in case the market continues to fall. And now is actually one of the best examples to show you guys. We've just come off a few big dumps with Bitcoin. So by understanding that this market can at any point have a very quick 18, 19% drop, you need to make sure that stop losses are always sitting in the areas, because I would rather lose 3% and have capital to buy the dip. And that's the whole purpose of actually the stop loss. So now I've set 41,000. That's where I want the stop loss to be. Then you can see there's a limit. Now, this is very important, guys. You never want to set these two figures the same. So basically you have the trigger price. Let me trigger. Then you got a limit. And what this means is they want you to give them a range. Meaning, because your order is going to go live at 41,000, sometimes there's a really big whale, guys. There's a guy that comes, or big person that sells, and you get this very big candle quickly, which means sometimes it can literally, if there's no buyer or seller at that specific point, it can literally drop straight through that price. So meaning, if someone really sells big, it can drop completely through 41. And if it drops through 41 and there's no buy or seller there, your stop loss won't trigger, which means you're still stuck in the actual position. So now they've created a range where you have the limit, and I usually use a 1% sort of limit for this. And I'll show you what a 1% is. It's more or less 40,000, 40,600. And what that means is you've got a trigger price, but in case it misses that trigger price, you need to make a range that anywhere between these two values over here, make sure I get out of the market. So you can see all these orders over here. And sometimes when a big guy sells, it can break through. But usually, especially with Bitcoin, there's definitely a lot of volume that if you create a range, it's a much higher chance of your stop loss going through. So I always use a 1%. Even a 0.5% for Bitcoin or 1% for the altcoins is always a good thing. But please make sure you do not put these the same, because that's where they catch you. It can fall straight through your stop loss and then you're still stuck in the actual position. So now, if I set that at 41,000 and I set this one over here at 40,600, there we go. And I go take this order over here, 100%. So that's the amount that you want to be putting under a stop loss. Sometimes you can put different percentages of your stop loss, and I can now place that. If the price gets to 41, you will then get put into the order book. And if it misses anywhere at 41, it will make sure it gets you out between 41 and 40,600. Doesn't mean it's going to get you out at 40,600, but it means anywhere between that, it will make sure that you get out of the market. So that is a very key tip to make sure of. And as you can see, it then places the order at the bottom. And now the whole purpose of this is Sheldon's just given me a trade. He's told me to buy over here. He's told me to put my stop loss. Now you've bought, you've put your stop loss, you can breathe. Meaning that if any time the market falls or completely drops, it will stop you out and you will lose, let's have a look, 3%. Okay, so now this is called managing your risk. So you're risking 3%, and Sheldon's saying we're going to go to 55,000 after this. So you can see that you're risking 3% for a move that can make you 20%. So that's risk management. That's planning. Now, stop loss is used. I buy, I put my stop loss. I'm only risking 3%. Now, all of a sudden, the coin starts to go and it really starts to move. And let's show you, for example. Now it really starts to move, and this is where your stop loss is. Now we start to move. The first thing you want to do, and do this for yourself, make a little rule. Every time a trade goes into 3% or 5%, I put my stop loss at entry. Because now you've bought, now we start moving. Now you take that stop loss and you move it up. How do you do that? You jump back over here. You can see it's an order that is sitting over here. You cancel it. And now you move it to the next figure. Let's say it's 42,000. Make sure there's a difference between the two. 41,600. There we go. We can see the difference between the two. Okay. And now all of a sudden the market starts moving. Bitcoin goes up. And we know the importance of higher lows. So with this, I like to track it up. So all you're going to do is you're going to come, cancel your stop loss, put a new one in. So what does that mean, guys? It means I've entered a trade. I'm protecting my risk. Now I've made the correct trade. I'm making money in the actual market. Let's get the chart off here. Now I'm making actual money in the actual market. Now I use my stop loss as a take profit tool. I don't know where the top is. I'm not predicting where Bitcoin's going to go, but I can take that stop loss and I can track it up in profits as we go. And at any point, we get a big, massive pullback in the market. Guess where you're getting stopped out? And now you have your dollars back to go buy the bottom. So guys, little tool for you guys. It is such a big tool. I've used it always. You got your hodl, you got your trading. I like using this for my trading portfolio. It's there to protect you. It's there to use with the structure. It's there to use the strategy. It's also very well used for take profit strategy. Stay tuned. Still amazing masterclasses coming up. I will see you all shortly.